What's up, everybody? In this video, we're getting into financing investment properties, and more specifically, we're talking about how to finance the acquisition and the rehab. So if you're out there are marketing for motivated sellers, as you should be. You should never turn off that marketing channel. You should never turn off your lead generation. That is your pipeline. That is the core of this. One of the most important things you can do as a real estate investor is to always be generating leads. But when you get a motivated seller on the hook and they're ready to, sell you a great deal, how are you going to finance that? And then after you buy it, if you are going to fix it up, how are you going to finance the rehab? First and foremost, everybody, I am Dave P. with The Cream. If you are not part of our free networking group, the Cream Real Estate Resources Group, I will link it in the comments below or in the description below. And we are full-time real estate investors, everybody. We've done over 1,000 transactions. We own and manage a portfolio. And to this day, we are generating six figures or more monthly. With our real estate flipping business. It is not that difficult. It is not rocket science. You just need to execute and get the right coaching, and that's what we're here to provide. Let's get right into this. First off, the agenda. We're going to talk about using your own cash. We're going to talk about 203K loans, HELOCs, that is a home equity line of credit, hard money loans, seller financing, which is essentially private money or financing in disguise. And finally, we will close it up with our favorite method to fund deals, which is private money. And we are experts at raising private money, and we teach people to raise all the private money you need. It's not that difficult. We'll be getting into that at the end of this video, so make sure you stick around. First and foremost, cash, everybody. Cash, yes, cash is king. The pros of using your own cash in your bank account is it allows you to move the fastest. So you get this motivated seller on the hook, and you want to wire the money to the title company. You can move extremely fast. You don't even need to make a phone call to a lender or anything like that. You can move very fast using your own cash. The cons is you are depleting your reserves, and it is the least scalable way to do this business when you're using your own money. You're depleting your own reserves. These reserves could be used for lead generation, payroll, and putting food on the table. Those are all very important things. If you have a team, you got to pay your team, right? You got to pay yourself, most importantly, right? You got to feed yourself, and you can't eat equity. I don't care how good of deals you're getting out there. You need to be able to generate revenue. If you're depleting your savings in these real estate deals, you could find yourself in a tough spot. And what you don't want to do is deplete all your business capital for real estate transactions and then not have the money that you need for lead generation, right? Don't shut off your lead generation funnel or the marketing efforts, because it is going to affect your pipeline. So yes, you could use your own cash to fund your acquisitions in rehab for real estate transactions. It is not ideal, because I don't care how much money you have. The more real estate deals you do, if you're funding them all yourself, you will run out of capital at some point. There is a better way. There are loans out there called the 203K loan. This is, I believe, an FHA product. So it's basically like a loan you would get from a mortgage broker. The pros is, yes, it doesn't deplete your reserves because it is other people's money. It's bank money, essentially. And the cons is there's going to be a lot of inspections. They're most likely going to give you the rehab money that you need for the project in draws, and that could slow you down. So let's say your rehab budget is 30K. Maybe they'll give you 10K up front, and after that 10K goes into the property, they're going to want to inspect the work that 10K did before releasing another draw, right? So that could kind of slow up your rehab crews. It could put you in somewhat of a tight spot time-wise when it comes to paying your people who are working on these properties. So it is not ideal to receive your money in draws, but it is other people's money, and there's a lot more paperwork, and there is likely a personal guarantee with this as well, meaning you're putting your credit on the line. So if you default on this loan, they could probably come after your personal assets, the house that you own and live in, primary residence, things like that, your personal bank account even, right? If you just ditch out on this particular loan, there is a personal guarantee more than likely, and that is another option. That is not something we do ever. In all the transactions we have ever done, we have never used a 203K loan. However, it is viable and it is real, and it is something to look into to fund your acquisitions and construction for rehab properties. HELOC. What is a HELOC? That is a home equity line of credit. Let's pretend that you own a house that you live in, and the house is worth 250. You owe a debt on the house for 100. So you have $150,000 in paper equity on the house that you live in. Well, you can take this down to a bank, and they can give you a line of credit against the home equity. That's how this works. The home equity that you have in the house that you live in, they will give you a line of credit, right? So if you have $150,000 in equity in your house, maybe they'll give you a line of credit for $85,000, something like that. I'm just making up numbers. Different banks have different programs and whatnot. The pros are you're able to still move fast with the motivated seller because it's basically the same as cash. It's almost like a credit card. You can tap into that line of credit. The cons are, number one, it is debt. It is secured more than likely against your primary residence. You are putting your credit at risk. And the lender could call these HELOCs due. This is different than a 30-year mortgage, right? Where it is still secured against your primary residence, or still secured, the debt is secured against a property, but it's different than a 30-year mortgage in that if basically the lender could call these lines of credit due at any time. It's a little bit scary to think about, especially if you get close to the max credit line. So if you have a credit line for 85,000 and you max it out, they might throw some red flags at you. It might throw some red flags at the lender, and they could very easily say, hey, we want this thing paid off or at least paid down, right? So with that being said, you can tap into lines of credit when it comes to raising the money for real estate projects. This is also not ideal simply because it is debt. It is personally guaranteed. It is secured against your assets, and the lenders kind of make the rules on these things, and they could call these things due. One of the more common ways to fund your acquisitions in rehab is going to be hard money lending. Now, when we first got our start, we've worked with tons of hard money lenders, and we suggest getting started. If it means a hard money lender is going to be more expensive, there will be fees. I'm not going to kid you on that. However, if you don't have an alternative and you have a really good deal at your fingertips, you want to pull the trigger on this thing. Who cares? Don't worry so much about the cost of money if you have a really good deal that you can monetize and you can make money on quickly. If you got to pay to play, that's part of the game. It's in any business, especially when you're first getting started. If you don't have a big track record and a Rolodex full of private lenders, I get it. You got to work with somebody who's going to be willing to lend you the money. So a hard money lender, they still move pretty fast. And there is going to be some paperwork involved. There might be some inspections by the hard money lender. I get all that. There are some cons. Number one, it's still debt. You're likely going to personally guarantee this debt. You're typically not going to get 100% financing. So what that means is, let's say you need $100,000 to buy this property. You need another $40,000 to fix it up. These hard money lenders likely will not give you the full 140. They might only give you 120. And that means you are going to have to put some skin in the game. The hard money lenders like to see you putting in 20K, or in that example, just put something in. They want to see some skin in the game from you, from your own personal money. If you don't have that money, you got to raise it from a private lender, and it could get a little bit complicated. Now you kind of got a financial partner. And typically they're going to give you your rehab money in draws. And we already covered that in the beginning of the video. Rehab draws are not ideal. It could put you in sometimes a time crunch. And when you're waiting for money to get released to you, but you have people to pay who are working on your properties, and they are typically going to want to inspect inspect your properties, look over your shoulder a little bit. That's never the most ideal scenario, but they want to know that you're doing the right things to the property they're lending, with the property or with the money they are lending you. And it could be a little bit longer when it comes to if you're waiting for rehab draws and things like that, inspections. It could take a little bit longer. But if you don't have another alternative, get in there, get a hard money loan. You got to have some courage here too. If you have a good deal, right? That's the thing. The name of this business, everybody, is lead generation, lead underwriting. You need to be able to evaluate properties. We teach this, right? And no matter what market you're in, we're nationwide at this point, everybody. We are doing deals in numerous different states, and we know how to evaluate properties regardless of the market. And this is what we teach our clients to do. So you could do real estate anywhere. You can live where it makes sense, do real estate anywhere, flip properties anywhere, but you really need to be familiar and understand how to underwrite or how to evaluate properties right from your laptop or right from your home or your office. And that's what a big part of this business is. Hard money lending is always going to be there no matter what's going on with the economy. Sure, the rates will change and things like that, and it is a great way to get yourself in the game. Just be prepared to put some skin in the game and have to deal with some inconveniences. Seller financing, you have the ability with seller financing to get the most amazing terms because sometimes the seller won't even charge you an interest rate. If the seller is going to carry back the note for an acquisition, then maybe you could just pay them payments until the balance is paid off. That would essentially be like a 0% loan. The cons are, this is the most rare. Most sellers are going to want to just be cashed out. They don't prefer carrying the note. Likely, if you do find a seller willing to carry the acquisition note, you're still going to need to fund the rehab. So you're going to need to find a private lender. And if that private lender is bringing in the money, if the seller has a first position mortgage because they're carrying the acquisition note, your private lender might need to go into second position behind that seller's first position acquisition carryback note. And that poses a bit more risk for your private lender. It could be a bit more convoluted. As I mentioned, most sellers are really not open to these seller carrybacks. We've done a few in our career. And potentially you have to deal with some annoying sellers. You have to remember that when you have a seller, who's carrying back that you're making payments to, they can sometimes be annoying where you have to pay them every single month and they are constantly hitting you up. We have a couple sellers like that on some subject to deals that we did where they hit me up every single month wanting to know where's the payment. Even though the payment comes in every month, they still watch you like a hawk and it could be a bit annoying. Finally, the best way to fund your real estate transactions on the acquisition and the rehab side is going to be private lending. This is a big part of what we teach and what we coach. And the pros are it's still very fast, 100% financing. So you get all the money that you need for acquisition and rehab. It's very scalable. When you're not using your own money, you can go find private lenders to fund your deals, and you can pay yourself an acquisition fee if you're getting a good enough deal, right? Let's say the lender is willing to give you 75% of the value, the after repair value of the property, but your all in purchase and rehab number is below 75%, you can actually pay yourself a small fee. It's a matter of just kind of like taking some of your profit, your back end profit, taking it up front. And that could keep you more liquid and you can use that money for lead generation, to pay your people, to pay yourself, and to really scale this business. If you can get good enough deals that allow you to pay yourself a little bit up front. You can't do that with a hard money loan. You can't do that with seller financing. And we love private lending. So the terms can be expensive. Hey, you got to pay to play. Typically, it's not a cheap date. We're paying double-digit interest rate to our private lenders. And sometimes you deal with annoying lenders, as a matter of fact. Sometimes, if somebody's new to the game, they want to know, they want to look over your shoulder and they want to like jump in the real estate game and they want to like learn real estate and stuff like that. Sometimes it's just annoying, right? You're going to pay these people. Their money is safe. Their money is collateralized against a house, but it can sometimes they just want to know all the nooks and crannies of your business, and it's kind of like an annoying dog nipping at your ankles. It's like, okay, look, we're going to get the deal done. They want to know what's going on with the rehab, and that's great. We provide solid updates to everybody, but when it's a daily thing, it could just be a bit inconvenient. Hopefully you got some value from this video. Make sure you check out our free real estate networking group. The link is down below. I am Dave P., and we will see you on the next video.